Hey friends, I'm back today because the Federal Reserve did meet yesterday. They did hike rates 3/4 of a point. So I wanted to come back, report what happened if you didn't see it, but also report how the markets reacted, both Wall Street and the mortgage markets. So again, we were expecting 3/4 of a point rate hike. Now, when we're talking about rate hikes, we're talking about the Fed funds rate, not mortgage rates. So I'm already hearing misinformation out there with people saying, oh, mortgage rates are up 3/4 of a point. No, they're not at all. In fact, they were flat and to some degree, even slightly down depending on the product that you're looking at. So mortgage markets reacted phenomenally well. The reason why is even though the Fed raised the Fed funds rate 3/4 of a point, which is what you watched on the news, the market had anticipated that. So it's exactly what I told you in my previous video just a couple days ago. That's exactly what the market had anticipated, theoretically pricing it in. Now, it doesn't always work out this way where what we expect and what's priced in really does respond exactly that way. But in this particular case, Wall Street soared. It went up aggressively yesterday, about 4%, with another significant rise today, which means the markets really were appreciative of the fact that the Fed did what they said they were going to do to tame inflation. So that's a positive sign. And again, mortgage rates flat. So just wanted to bring that, make sure you saw it. We're expecting now when we look at the next meeting that the Fed's going to have, which won't be for 2 months, by the way. It's not happening until September. There will not be a meeting in August. They are right now, the market is betting on 1/2 point hike. So they're betting that the Fed will actually taper back a little bit. We'll see if that happens. And of course, the biggest indicator of that will be inflation. The comments from Chairman Powell were very much such that he left the door open to tapering back, but he did say he's going to do what he needs to do. And so far he has. We'll see if he continues on that. And of course, the fear out there is Fed, don't succumb to political pressure. Do what you need to do. Get inflation under control. Now, there's so much more that's out there. There's changes right now in inventory levels. There's changes in absorption rates, how many homes are going to market versus those that are going off market, meaning going pending and then closed. And also just movement in the average price point, days on market, et cetera. There's changes everywhere. And so my commitment's been that I'm bringing you just an unfiltered look at the market conditions every month. And in this email, if you receive this by email, there's a link to a webinar. It's going to be 20 short minutes. And if, by the way, you're seeing this on social media, look at the comments. The first comment should have a link to that same webinar so you can register. My commitment is just 20 short minutes together. Get the information, zero agenda, just the pure raw data. My belief is that the market never really hurts anybody. The market, not even in the Great Recession, hurt anybody. But what really devastated people was not having the right information, not having the right data, not having the intel so that you can make smart decisions, and also having sales-driven, sales agenda salespeople that were driving their own interests. What I want you to do is not sell your home if that's the right thing for you, if you have a long-term view with it. I want you to hold on to certain assets, but of course you also still have to know the environment under which you should make a move by understanding the current conditions. So look at your email. We're going to go 20 minutes just like we did a month ago. Register for that. We'll see you there. And again, if you're watching this on social media, just check the comments. You'll see the link.